Hey everybody, Greg here. So a little bit of a nasty in the market here today. We'll take a look at see how severe it is or the lack thereof, or where maybe it's going to go. But it's all about inflation reigniting, and down here at the low in September was not a big deal. And over here, you might remember maybe during some pre-market analysis, we were actually looking for this to drop because it broke this support level, and it looked like it was going to go down. And then it didn't. And it's been going up since. And this morning on the jobs report, it continued to go higher. And as we look at the weekly chart, here we see it's now exceeding the prior high and looks like it can continue to go higher. And look further over to the left there, and we got that 5% area from back in 2023, which looks like it's going to go to. So it was a little bit of a consolidation on the weekly time frame. It was a correction bar, and now it's Friday at 12:18, let's just say. So unless this thing was to reverse severely in the afternoon, which certainly doesn't look like it's going to happen. You can see on the 5-minute chart it's still holding up here at the high of the day. We're going to have a breakout bar, wide range bar, suggesting it's going to go higher, which would imply that the markets are going to go lower. Adding fuel to the fire is the fact that crude oil gapped higher this morning, and it's backed off a little bit. It's up near this resistance, but more inflation concerns. All right. The stocks or indices that moved lower, and we were having a little discussion in the green room before, how this is the kind of scenario that could really take somebody out of the trading profession, meaning this is the type of pattern that historically probably 90% of the time works out well, meaning you get a retest and reversal, and it goes up, say there's a resistance area up there. That didn't happen. So I'm just making up percentage numbers here, but let's just assume this is the 10% of the time. I think it's greater than 90% where this kind of a pattern goes higher than what this did. And now it's breaking down under all of this support, which opens up the door to down here. So someone that, for whatever reason, we've all been there at some point when we started out, didn't adhere to a stop or didn't even have a stop, this opens up the door to a significant drop. And now somebody goes into hope mode. And now if this continues to go lower and lower and lower, at some point it's going to reach this support level. There's $200 down here, let's just say. And those that didn't adhere to their stop are going to throw up. We've all been there, done that too. And I know what that pattern looks like on the chart. And when that happens, it's going to be a giant opportunity for those that adhere to their trading plan. And so we look at the transports, that hasn't broken yet, and we'll see if that does. But looking at, and this is what brought up the conversation in the green room, Alex mentioned to me, Greg, take a look at S&P 500 value. And it was this pattern, similar pattern, where you get, accelerated move. And he commented, oh, is it oversold? Is it extended? Now watch how much more oversold it can get. And so this kind of a pattern, which also historically works out very well for a bounce, not a trend change, a bounce, it didn't. And this is bearish, where it comes down here. It's bearish after the fact that we see, right? So let's get that straight. It's bearish that it had this decline. That doesn't mean it couldn't recover, but it could not go up. So after a certain amount of time, the clock runs out, right? The sands in the hourglass, so to speak, run out. And it's like, and when the news was the motivation factor here, where prices now began to drop. Another analogy that I could put here is, it got extended, and the gas tank, so to speak, gets on empty as far as the supply goes to continue to move lower. And this refuels the tank. And now this consolidation, which was an increase in demand, now turns into supply that could drive this lower. So until this has some kind of meaningful reversal, and meaningful would be to take out a pivot high, it could close above a prior day's high, right? The first reference point of resistance is a prior day's high. So, for example, if Monday it was to gap above this high and close strong, it'd be like, oh, that was a breakdown failure. What about all that bearish commentary, Greg, from last week? Things change. Right now, this says it's going lower, and that's what we believe until there's something to believe otherwise. The weekly chart tried to stabilize and it's failing, so it looks like it's going to go lower. We have KRE, so we start seeing more and more evidence of stocks or indices that are all moving in the same direction. So there's mass selling going on, and this has room to drop into the void below. XLF breaking down, another bad sign. SMH is holding up relatively well. Well, even though they're down, they're in a trading range. So we're going to keep an eye on this to see if it maintains the trading range or not. The diamonds, another example of refueling the tank, and it's breaking down. Some opens. D-Dog, that looks lower. The credit spread, it looks great. UAL, that is a bull put credit spread. That's fine. Tesla was today. Took a little heat on that one. 400, 410. Call spread. And so, it moved up a bit. And it's just jiggling down here. I think it's at about a 50% gain right now, give or take. And it can go sideways here. You could probably start bidding a dime or a nickel. If it drops here, I'm sure you can be able to cover it for 5 cents or whatever. It's still half the day to go. But if the market can make another little drop, that would be great. The Qs here breaking down right at the moment, closing under these pivots. It's down here near the low of the day. A little bit of support here. This pivot right there, which it hasn't touched yet. You got the 500 level, that big whole number, which will be a reference point to keep an eye on. See if it holds there. Let's see what else we have open here. Oh, the ETF letter is flat. So we saved subscribers from the beginning of getting crushed when we got our risk off, which was, I think it was in sometime here, I think, whenever that we got the internals giving us that signal there. And the advisory letter, this one is still doing great. Oracle from last week. It's got room to continue to drop. Looks great. Just looking at some others. IMAX. I don't know when Dan put that on. But that is a short that looks great. So, yeah, all of these things look good. It looks like they're going to go lower. This is the example of a big top and void. It's got room to go down. So, yeah, we'll see where this all ends up. As always, if you have questions, email myself and Dan, Greg and Dan at Master Trader. And have a great weekend.